All right, welcome everyone. Welcome to the Market View commentary for Monday the 30th. I believe we only have we've got 3 more of these for the year or less, and then we're going to call it quits. Have 2 weeks to enjoy the holidays. So welcome to the final bit. Last week, another up week. In fact, this has been the best November since like 1987. Been pretty neat, but we had 2.3% up last week. Again, progress on the COVID vaccines. Really, Maud, I'd like you to jump in here anytime. Dr. Gupta, if you're here, feel free to jump in as well. But the whole idea is that we're going to slow down the contagion, not eradicate it, but slow it down so that our hospitals can keep up with the demand. Someone let me know, we've got 200,000 Pfizer vaccines that are just flown from Belgium to Los Angeles. And the funny comment was, well, 2,000 hardly puts a dent in it. And I chuckled as I talked to him, and Dave, if you don't mind me saying this, but I said, yeah, I mean, 2,000 isn't anything in all honesty, because 2,000 for Pfizer, you have to take 2 doses. It's only going to be for 100,000 people, and it probably should be for the frontline people at that. So the short answer is, under no circumstances is this 100,000 going to make a dent in stopping the cases. It comes back to mass social distancing, quarantining, but it's a start. And I'd rather be in a start moving forward some way, shape, or form than not. It's but yeah, by no means is this going to be a cure or slow down anything. In fact, we're probably again looking till July through August of next year to have enough quantities to truly make a huge improvement. But again, it all comes down to slowing it down enough so that there are enough hospital beds available and that our frontline people are getting taken care of as they put themselves on the line over and over and over again for this. Maud, please jump in if there's anything you can say that will, and you already did, so let me pull it down and find it. I go to my local resident doctor here. And Maud says this is exactly what we were saying 6 months ago. Wear a mask, social distance, and wash hands. I agree, Maud. I just feel sorry for those people that still want to pick their noses. And she says that will slow it down. So there we go. I'm on board. It's funny because Maud and I somewhat do disagree. I do think the masks are worthless, but if it'll make someone else comfortable, and if I have it and I don't know it, and it stops the spread of it to people, I'd be a fool not to wear the mask. So I fought at the start, but I jumped on board in April, and I've been doing a pretty damn good job of it since then. She keeps going, next time I have surgery, tell a surgeon not to wear a mask during your surgery. So, Maud, that's kind of funny because I did say that in my last surgery, and my wife told her to put the damn mask on and don't touch my husband's lips. So I was like, ooh, that didn't work out the way I wanted it to. And and thank goodness Maud just gave me lots of laughs. So, okay, here we go. Let's go through this a little bit here. The closing high mark was reached. Our previous closing high of 36.35 on the S&P. We ended it at 36.38. So we are continuing to make new highs. This is a secular bull market. So as much as I've been afraid of our market coming down, we're usually going to have some pullbacks, another 37, 38% like we had at the beginning of the year. That is part of a secular bull market. I guess it means you still have these pullbacks. I would have called that a being in bear market territory, but apparently on a secular bull market, you are going to have these pullbacks that are going to be a bear market pullback, 20% or more. I find it very interesting that our new hospitalizations came in at above 90,000. Obviously, it's probably directly related to colleges starting up. It's directly related to parties. It's directly related to big groups getting together. And obviously, our government doesn't abide by their own rules, so it makes it hard for others to do likewise. It'll be interesting because if you read that fourth paragraph down, investors continue to be optimistic as Morgan Stanley said the company's vaccine will be an important part of the solution, given that its manufacturing is straightforward and the low cost, and that the company can manufacture more than 3 billion doses by next year. That's where the AstraZeneca comes into play. I also believe that the AstraZeneca is the one that does not have to be at a ridiculous 20 degrees below zero. It can be a room temperature. Yes, it does not have the same effective rate of protection, but it's more easily used to truly slow down the spread. So Pfizer, biotech, Moderna will have ones in the 90% plus efficiency rates. Let me take that. Yep. And AstraZeneca will be in the 70%, but much easier used and much cheaper. And hopefully that'll do the difference. That'll be the difference. When it comes to what we're doing today, I kind of tell it, so what's going to happen in the next 4 weeks, historically speaking? Anyone know what typically happens this time of year? What happens between, I think it's Black Friday and the first week of January? Santa Claus rally. There we go. So we have our, come on. We've got a Santa Claus rally. Usually goes by a Christmas rally, but I'm going to call it a Santa Claus rally. The short answer is personal spending / GDP goes through the roof, right? That's what happens. There's something else that happens in here, though. Big but. But what else happens? Where we're going to have a bear market week. Horrible. What happens in between this? Usually you have a run, then something happens and it runs up again. We're going to go through an end of the year tax sell-off and or rebalancing. That usually happens sometime between now and Christmas. You're going to see 2 or 3 or 4 or 5 days. We're going to have one down day, and then the bottom falls out. Then all these people are thinking, oh, I got to sell when things are up high and take losses and blah, 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 blah. So we go through this Santa Claus rally and it gets interrupted. it gets interrupted with a 2 to 5 business day sell-off. It's, hey, you know what? What can I stay out of for 31 days? Take a loss in, get back in January. That's where we usually have that end of January, February bump or run as people are putting their money back to work. And so at that point, we either plan on a really short-term long puts or we just live through it. One of the stocks we've done that to most recently was Apple. Apple, even though everyone was saying, hey, it's going to go lower, and wrong thing there, it's going to go lower and we got to watch out for it. Apple, we decided we're going to live through the downside of Apple. In fact, I know I'm showing it on this, but what I really should show it on is FinViz. Better chart. Super cycle is going to suck. Look at how those trend lines came together and we had a breakout to the upside. When all reality, all we had from the true drop or the true worry, we had a drop from 125 to 110. And then it was from about 120, 150 down to 114. And now we're getting the breakout above the trend lines. And we should move higher into the end of the year. It's Apple at Christmas, for crying out loud. Absolutely unbelievable. If we look at the charts, I got them posted already. Come on, Hurley. Use your brain here. Got to get to the right stuff. If we look at our charts, we've got room now to head up to an overbought position. Chances are we're going to come back up and break above 30,000. We'll head higher for a little while, have this pullback, which will most likely get us off the overbought on the Dow, and we'll keep heading higher. Nice little dip in October, good run up. It's what's making our year right now. If we look at the S&P, very interesting comment, and I've got the article down below. There calls for the S&P to run above 4,000. We're looking at over a 10% run up from right here. I've got the article down below. It'll be interesting to see if it happens. We're already, though, on the S&P getting slightly extended above. It comes to a point where you get too far extended above the 50-day, and that spread gets even wider with the 200, which will probably happen, in which case we're going to have a pretty good pullback at the beginning of next year sometime. Probably will be that same February, April, this time frame, that 3-month, that quarter, where we've been overextended. We find out the vaccines aren't working as quickly as they're supposed to. People realize because we've got vaccines, it doesn't eradicate it overnight. It's a pretty interesting, I'm going to term it a come to Jesus opportunity for people to understand that yes, the markets are forward looking, but it never happens on your times table. And when that happens, you've got to take it into little common sense and get it figured out. All right, and then we look at the NASDAQ, which remember we were just told don't go on the NASDAQ, it's going to tank. Whatever expert made that comment a month ago, you're an idiot, dude. Kevin, but technology doesn't have this and taxes and Biden coming in. I know, but it's Christmas. We will probably see that in the first quarter of next year. Don't be surprised if we have a repeat percentage-wise with another 37, 38% drop starting in the first quarter of next year. Rallies get extended, they get exhausted. Reality kicks in for certain people. When the selling starts, retail money is usually the last, and big money kind of kicks you out, and you're sitting there going, well, dang it, what do we do from here? It's part of the process. The neat thing is the NASDAQ was down 7 points today, 0.06%. Not too bad at all. The S&P, which is our benchmark, down 0.46%, almost a 0.5% down, not really good. The Dow, again, not one of our benchmarks, not really important, down 0.91. If you're interested in about 30-ish or so stocks, you follow the Dow, but it's not an index that's widely followed, not one that's benchmarked. With that said, give me a second here. You think I'd know how to figure this out and have things ready to go when they're ready, which they're not. Right there. We are up 9,000 on the day. That doesn't mean that everybody is up 9,000 on the day. What it means is that as a whole, our core holdings are up. And the neat thing is this one isn't even related to having Apple, Disney, Newmont. Our losers, Boeing, Bank of America, JP Morgan, Under Armour, Baidu, Visa. I mean, the reality is we're just doing a little bit of rebalancing. If it continues down, we'll get some more protection on, but our growth today is nothing more than stock picking. Our stock picking right now is better than the indexes and the average. It's time to get some money to work, to look to see if we can't find some opportunities for a short-term 4-month type of trade. That's what we're looking at. The neat thing in extended hours, Apple, see if I can't find, let's find a watch list really quickly. Apple in extended hours is up another $1.76. Love it. Boeing in extended hours up another $1.48. Bank of America in extended hours up another 24 cents. Baidu is unchanged, dang it. Disney extended hours up another 74 cents. Ford extended hours up another 4 cents. Facebook up another $1.43. Where is, let's go down a little bit farther. Lockheed Martin up another $1.80 after hours. Target up a whopping 12 cents. Under Armour's unchanged. Dang it, I was hoping that would be a little bit higher. Actually shows it's down 6 cents. Visa after hours up another $1.65. So the buying back in after hours is already included. We will most likely see an update tomorrow, as it's the first day of a month. New money comes into funds Pre-market, come on, pre-market. Wow, really? Pre-market, the Dow's up 152, the S&P's up 22, the Nasdaq's up 97.5. So our pre-market futures right now look like we're going to get some big buy-in going into the end of the month, which means we're going to do the best we can to uncap positions and let them run. New money, we're going to get into our core positions, or if we have some extra cash sitting around, we're going to get into some more positions and try to do the best we can to get a run in these next 2 to 4 weeks. That's our goal. That's what we're shooting for. All right. With that said, don't need that. With that said, going to give December a 2.5% month to the upside. That's my expectation. Earnings are the end of the retail. Zoom was after hours today. Tomorrow, Hewlett Packard, Salesforce. Wednesday, Guess, PVH, Five Below. Thursday, Carnival, Kroger, Dollar General, DocuSign, Smith & Wesson, Ulta, Kroger. Friday, Big Lots, Genesco. Economic reports, not a whole lot going on until Friday. This is a seasonal time period where a lot of people get hired seasonally. So you're going to see some improvement in payrolls and private payrolls, most likely. Amazon's doing a big $10,000 person increase in their employees for the season, and then obviously those people all get let go just before Christmas. In January, you see unusually or seasonally high unemployment. Don't worry, for all those who love Biden, it's always Trump's fault. It has nothing to do with the seasonality of the job or the workforce and the flows that you go through a Christmas. When it comes to how I'm looking to trade, plain and simple, how far to let stocks run into Christmas rally. We will get that pullback. And that's when I will probably look at lightening up to make sure taxes are as low as possible for individuals. I'll probably have a talk with some of you on taxes. I start to make my calls throughout this week and next week. But my decision is how far do I let stocks run into a Christmas rally, and how much money can we make before we get that tax selling that happens or rebalancing at the end of the year that inevitably always happens. As for articles, really interesting article on AAA rated bonds that are trembling or tumbling as China starts to default. China is in an awful position monetarily right now. Economically, their housing markets, they're overextended. China is still the second biggest economy in the world. And it's hard to believe, but China, if you just look at the numbers, is in bigger trouble than the U.S. Well, Kevin, how does that affect Baidu? It really shouldn't. What's affected Baidu is U.S. and Chinese relationships. Boy, they are a spring just poised to take off if you look at their basic numbers. Please read through this. It's very interesting to understand where your competitor is at and how it can affect our markets. Interesting article. Loved it. One of our biggest bulls through Capital Wealth Planning made the comment that stocks will see another 10% before the end of the year. Please read through this. I enjoyed it. It would surprise me if we broke that 4,000 mark, but maybe it wouldn't at the same time. From Tesla to Rivian to Ford to GM, take a look at electronic truck automakers are making. Ford is making a great run. In fact, I've got a little blipping on Ford. If you want to see what's happening in the truck market, here's some reading on plain and simple trucks and electric trucks. until they go 4, 5, 600 miles. Not too interesting for me. Also depends what you use your truck for. It's probably pretty nice to have a truck that could go 0 to 60 in 3 seconds. For me, it's more important what it can haul and its towing power. Hit another record on online sales, 5.1 million. Adobe says on Thanksgiving online sales. Pretty amazing as people stay at home, become couch potatoes, and buy their stuff off of Amazon. A lot of tech companies are sick and tired of California. California is being so poorly run. It's good to see some of the better companies. I know Adobe and Microsoft have been moving out of California. It's good to see some of the big tech move out to areas that are less liberal in general. With that said, pretty interesting that interesting to see what they do to other economies and other states. Little blip on Ford. Ford can be fixed. Why its stock could double. Nothing to do mathematically. It was just a little blip that came across. The whole article is in Bloomberg. I wasn't able to find it just yet. But if you maybe Google search, can Ford be fixed? Why its stocks could double? You might find the whole article. And then Under Armour. About time they're starting to get on board with different product lines. Under Armour, again, don't be surprised to see this up at $22 by the end of the year. It's nothing more than going back and touching some new previous highs on a yearly basis. With that said, what questions do you guys have for me today? Or do you have any questions at all that I could answer? Don't forget, if you have that question, chances are someone else has it as well. But what questions do you guys have that I can answer? Kevin, why are you letting stocks run right now without protection? So, Lance, I made it, I thought, pretty clear, but short and simple. If your technicals are bullish, I'm going to come back on you and I'm going to ask, why are you adding a bearish position to a bullish stock? Level one is plain and simple. Technical analysis, fundamental analysis, sentimental analysis. If fundamentally your stock is not sound, it's at risk of going out of business, you shouldn't be putting trades on it. Technically speaking, you should put the proper trend to follow the proper trade. And sentiment right now is typically bullish. So, contrary to popular belief, if you want to make money, you can't always have your positions protected. You're overpaying for protection. You're giving away your profits. The short answer is I'm letting things run because technically we're bullish, and technically or seasonally, sentimentally, this is a time when stocks should run. I could change my mind tomorrow, but I want to make some money. So I'm going to let things run. I'm going to make a bunch of money. I hope that answers your question. David W., what do you think about Boeing? Again, I still think you could see Boeing up at 250. It's already been to 231. We've broken above the bigger trend line of 200. We're almost at a golden cross, which gives us another 8% to the high side. 8% on 216,000 is another 16, 17,000. That puts us back up to the yearly highs at 231-ish. Again, I'd expect 250 because how well they've hung in on a 19, 20-month stoppage of their planes. Their pipeline for sales is still very much intact. They lost 6.7% of their sales, replaced it with some Dreamliners, which were more profitable. You know, net, they're out 3.9 or 4.1. I can't remember where I calculated out. But let's go with 4.1 of their business they've lost in their pipeline over the last 19 to 20 months. Their comps are low. They're going to have orders shooting out the door, payments coming into them. They're sitting on hundreds of planes sitting in a parking lot. Boeing would be my breakout stock for next year. Watch it be back up to 350, 380, maybe as high as 400. Good question, though. What else do we have coming in? Russ. The 2020 report last week didn't help Boeing's trust. Well, no. I mean, in all honesty, Boeing lost their trust 20 months ago when all this crap started to happen. The neat thing is they lost 4.1% of their total volume of sales coming in. Most companies would have went out of business. So the unique opportunity with Boeing is the fact that they are a premier plane maker. Airbus is their competitor. Their supply line was hurt but ready to come back. Their backlog of orders stayed in place. Their backlog lost 6% of their order base that netted out to losing 4.1% of the revenue, because out at 6%, some switched over to the Dreamliner, which is more profitable. Yes, their trust has been hit and shot. A part of me is going to tell you that doesn't matter. Money is going to speak louder than trust or thoughts. Airlines want cheaper fuel prices. They're going to keep moving higher. It's Wall Street. When was the last time you trusted Wall Street? Good question. But yes, you're right. The report did not help at all. Are there any other questions? Kevin, would you use leaps over stock ownership? Yes, you could definitely use leaps over stock ownership. You will not make as much as a dollar figure return, but as the percentage return, you'll probably make a better return. So if you want more real dollars, you buy the stock. If you can't afford the stock, but you want a great percentage return, you buy a leap, and maybe you see, a 20, 25% return on a, $6, $8, $10, $12, $20 investment. Either way, the short answer is, if you can't afford the stock and you don't want the dollar for dollar movement, or you can't afford the dollar for dollar movement, get into some leaps out to January 2021. Plan to get out of them in 4 weeks. Make a good profit and get out the door. And yes, I would do something in 4 weeks, not just 90 days. And that comes down to, in case you're wrong, could you make more money by paying less for a 3-month leap? Possibly. You're going to hit more time decay. It'll be much more volatile. Maybe we're wrong. We don't have this big drop next year, and you keep holding on that leap and keep making a ton of cash. So the short answer is, it's kind of your decision. And yes, it can be in all kinds of leaps. We're stacked up in a bunch of leaps on we're stuck in a bunch of leaps on Boeing. Come on, Boeing. Can't get to where I want to go to. We're in all kinds of leaps across the board on Boeing. We have some naked puts in there against some long puts. We have 98, 275 calls that the cost basis says $7.30. It actually is closer to $13.60. We took our first half off or third off. We've got some $8 January 22, 330s were 13. At $16, we'll take half of those off. We have some nice ones, $4.99 cost basis with a 200% return on some 350s. We recently took a third of those off. We have some 100% returns, 275s, June 22, 1550 were 30, 35, so not quite 100%, but we're awfully close. Yeah, I mean, you don't necessarily need to go at the money. You can go out of the money and play some of these runs up. It's been a fabulous return for us on Boeing, but we sat through it through a bunch of years here, so to speak. At least through last year, right? This year, not last year, this year. We have some cheap $2.02 leaps on Bank of America, but it's relatively cheap. It might be a good one to be in there. Baidu, we got a ton of calls at Baidu stacked at 63 contracts at January 22. We consolidated those on down, by the way. We did like a 4-for-1 condensing down, so we didn't have to spend more money to get those farther out in time. So if I was going to get some new positions in, I'd probably look at Visa. We're a little under leveraged in Visa for people. Visa would be a good one to maybe get some leaps back on for individuals, and it'd be, well, I mean, I guess I do have 124 contracts. So we're not maybe too under leveraged, but we did take some great profit on our Visa leaps. Thank goodness. Under Armour's a cheap stock you could run along with. And yeah, I mean, that's where we're at, guys. Any other questions? All right. Hey, you guys, pleasure being back with you. Ooh, here we go. We got a big one. Ooh, so never mind. I can't tell you, but all I'm going to say is I just missed an opportunity as I'm reading it what was sent to me for a heck of a hunt. Well, I am planning on getting back east, hopefully for some good fishing, get some ice fishing in. That way I can shoot the crap with some people and have them listen to me talk for 8 hours at a time. All right, guys. Hey, you guys have a wonderful evening. I'll see you guys tomorrow night. Until then, be safe, wear a mask, wash your hands, don't touch people on the lips unless you're married to them. Have a good evening, and I'll talk to you tomorrow. Bye-bye.